Hey guys, I'm super excited. I can't believe it. We're getting back to the old times. I got great news I want to share with you. However, I guess we should get some work done first. So let's go into my office. Let's look over the recent June report to see what's been happening in the real estate market and of course the mortgage industry. And then I got some awesome news I want to share with you guys. So stay tuned. Make sure you don't leave. I'm very, very excited. The good times are coming and I just can't wait to share this news with you guys. All right, let's talk inside.
Wow, June just flew by. I can't believe we're already into July. The reports have come out locally, so we now know where things stand regarding real estate over the month of June. And yeah, so let's dive right in and see what's going on out there. First of all, as I typically always like to start with the mortgage side of things, there really isn't much to announce there. Things are relatively stable from my last report. Unfortunately, we're seeing the fixed rates at record time, all-time highs. Hovering in around the 5% mark, which is quite high, again, depending on what kind of mortgage I'm dealing with there, which means a lot of my clients are opting for the variable because there's a significant discount to be had there. Unfortunately, it looks like that may be short-lived. Well, possibly, as we do have an announcement on July 14th that the Bank of Canada will be most likely raising their interest rates. Speculation is at least 0.5% and most likely more like a 0.75%. So we'll have to stay tuned for that, find out what happens in regards to the mortgage side of things. By all means, when you have a variable, I'm advising all clients to start to plan as if you're already paying the higher interest rates on that. In the meantime, take advantage of paying down that mortgage a little bit quicker by paying perhaps a little bit more on the mortgage in the meantime. So that's where things stand regarding mortgages. I'm hoping that we might see a little bit of a flattening, especially come the fall months for the fixed side of things. As from what I understand, many of the banks are starting to see their books start to fill up with money, and they need to get it out there. But people aren't buying and refinancing, whatever else. We're just seeing a lot of cash, which they just don't really want to sit on. So hopefully that will motivate the banks to hopefully drop their fixed side of things a little bit in order to get that money reinvested into mortgage borrowers. Anyways, on the flip side, let's dive into the real estate side and see how this is impacting real estate. We just came out the other day with the Kitchener-Waterloo real estate month-end results. So let's have a look at those and see what they're saying. Okay, here we are at the Kitchener-Waterloo real estate website where they've posted their June numbers, so we know what's going on out there. And as you can see, according to the headline, home prices continue to dip as month supply returns to pre-pandemic levels. So for the buyers, I mean, that's great. It means we have a lot more homes to buy from. Sellers, maybe not so great. I think the bigger picture we got to pay attention to here, though, is are they selling? Like as a seller, that's all fine dandy. There's more inventory, more options. I don't care, but is that going to impact my ability to sell a home? Very interesting stat I'm going to share with you right here is that we are looking as of last week, 1,037 listings on the market right here at the top, right above my screen here. And this same time the year prior, we only had 341 active listings. So we're approximately almost 3 times the number of houses sitting on the market. Now, this factors for all styles of homes, towns, detached, condos, you name it. But the point is there's a heck of a lot of options for buyers to pick from, which is great. It gives up buyers opportunities to choose from, but it also means that the sellers perhaps aren't offloading their homes as quickly as they may have liked, which may mean they have to either be very patient, which I know many of them are opting to be, or they may have to offer the buyers some sort of incentive. So therefore, perhaps a lower price point in order to encourage the buyers to get on board for buying their home. So if we continue down through the QAR report here, I like to look right at the little chart. What I find very interesting is that they give us the last 3 years of average detached homes. And I know for many of my buyers, it's been very discouraging, especially first-time home buyers, because the home prices have gone up so high, they just can't keep up. What's very interesting about this one is that, yes, well, overall, we are seeing an increase in values. Sorry, I can't get the screen any larger here, but we are seeing an increase in values. But what's really interesting is that the detached homes are pretty much back to where they were last June. And we all know that home prices were actually significantly above $1 million mark earlier this year. And now, according to this, we're down to 920. I will share with you another screen. We have here at peak the our summary. And as you can see, single detached, look at 920. How much of an increase? You got to keep in mind, this is not in the last month, 2 months, 3 months. This is saying comparing last June, this June just passed, the previous June, June 22, we have seen pretty much no increase in value of homes. So any increase we had experienced on average, again, based on average sale prices, we are right back to where we were beforehand. Now, the more cost efficient or affordable homes, we are still seeing that a higher price point. And that may just be that there's more buyers that are still fighting for homes in those price brackets. As you can see here, we got the semis up 9.5%, townhouses still up 11.9%, and the condos down here. Now, what I find also very interesting is that the townhouses, well, that sounds great, 662,000 up 11.9%. What you might want to pay more attention to is where were the prices. We were earlier this year on average pushing closer to the $1 million mark with the towns. So at Peak Realty, we do have our regular weekly meetings. What we've done is we've broken it down to monthly, so we can kind of see what's happened over the months, and then looking more closely at the week-by-week analysis so we can guide our clients as to where we think values stand. So this chart in front of you here shows all property types, so detached homes, semi-attached, condos, whatever else. But the point I'd like to draw your attention to was around February mark, we were quite high, almost just shy of $1 million average sale price of all property types across the entire region. Now, for the month of June, we're down to 781. Do have to be very careful and mindful as our July to date is really only a few days. So that could be an anomaly. Not a lot of sales, as you can see here, 42 sales versus 509. So definitely pay attention to the month over month numbers. What I like at the very bottom here is these charts that show this significant rise in values. But as you can see, in recent months, this has just dropped right off for the overall sales prices. And the other thing we're really noticing is that the homes are just sitting on the market. So our average numbers are up significantly, and we're seeing a lot less of these underpricing of homes and hence the significant increase in prices. So if you look at the list to sale ratio, as you can see, our homes at the peak were almost 30%. So on average, if you took our entire list prices and you looked at our sold prices, we are selling them approximately 30% above the list price. That being said, of course, we were underpricing them to pull in those multiple offers to help get the job done quicker and often resulting in the seller getting a lot more money for their homes. That strategy is not working as much. It is still working, which is why we are seeing still an average sale price above the list price. So that would be a case of, the ones are just listed abnormally low, they sold 110% on list price. Well, then again, they might have been underpriced by 10% anyways. Hence, that one skews our numbers up, whereas other ones might have sold at 95%. So really, we need to analyze every individual home to see whether or not they are playing that under list strategy or the over list, and if so, how much. So that's where a deeper dive into the values play into things here. As you can see, the cancel ratios, though, have definitely risen significantly ever since March. Okay, again, ignore the July to date as we've only a factor for 1 month. At the end of this month, as we get into August, we will have the numbers according to this. But in the meanwhile, as you can see, we are up significantly on the sale to cancel ratio here. And that does seem to be, leveling a little bit, but it's almost a 1-for-1. For every sale we get, we're getting one cancellation. Going further down to one of my next charts here, we've got the single detached homes. And as you can see, very strong at 1. In theory, it's 1 to 3 for this one, but again, be careful about the July numbers. Not necessarily a good indication of what's going on there. And as you roll into our, all right, sorry about that, into our townhouses, you can see again, those prices are definitely increasing on the cancel side, and our list to sell ratio has actually started to drop. Again, we're just not underpricing as much, but again, very interesting to see where our average sale prices are coming in at. At the peak, we were in around just shy of $1 million, and now we're showing, for the June, really we're down to the low 700s. This is for July, really 2 sales. It could just be we sold some higher end townhouses or ones that just did really well. So again, look at the month to month, and as you see, our average for the month of June was only 739. Of course, that means some maybe sold at 800 or 780, whereas others perhaps only sold in 600. So definitely pay very close attention to that. Okay, so I hope that was helpful for those of you that like to track the market, what's going on there. For the sellers, it's maybe important for you to pay attention to where the price trends are going. If you're thinking about selling, this would be a good time because unfortunately, I think as we continue to see the rates increase on the mortgage side, potentially a recession around the corner, it may be a good idea to get rid of that home because none of us have a crystal ball. We have no idea as to where things are going to go. On the flip side, buyers, if you're going to be perhaps moving up to a larger home, one thing you got to keep in mind is you may not get as much money for your pre-existing home as you may have liked. So unfortunately, definitely factor for that. Give me a call. We're going to have to run an evaluation on, whether you've qualified mortgage-wise, especially with the new mortgage rates, and what can we look at getting for the home. For many of my clients, I'm actually advising it might make more sense to sell your home first with a longer closing, and that way you can proceed with confidence on the other end. What you don't want to do, and what's happening to a lot of people, is they are buying, assuming they're going to get the amount they want for their home, and it's not resulting. And in some cases, we're actually discovering that homes just aren't selling in general. So we'll look at the value, say, okay, yeah, based on this is where your home should sell, but if they're not selling, you're not going to get any money, in which case you're now going to not be able to follow through with your commitment on the purchase side and potentially face a lawsuit, which none of us want. So definitely a time to be much more cautious, perhaps put those conditions back in, conditional upon the sale of your house. If you can get a seller that's motivated enough to perhaps take on that condition, usually, as I say, the clients are going to have to pay a bit of a premium to motivate the client, the seller in this case, to take that on. But anyways, lots to discuss. Feel free to give me a call, shoot me a text, because a lot of these things require a much more in-depth conversation, not just this quick little update video. Hope you found this helpful. Now let's get to that big announcement I want to share with you guys. Have an awesome summer. Bye.
It's time to celebrate good times. We are back. Client appreciation event. It has been way too long. I've missed seeing all of you guys. So if you have some free time September, check out the details. I'm going to show you guys some clips from previous client appreciation events that we've hosted. Great times for everybody who's had the opportunity to come visit. If you haven't had an opportunity to come to one of our awesome free client appreciation events, please come join us. It's going to be absolutely spectacular. Check out the video. Make sure you RSVP to myself, email, Facebook, text, whatever works. And I'm going to put you on the preferred list, and we're going to get you in there. All right? So enjoy your summer, and let's keep on celebrating come September.